Welcome back, guys. And in the previous lesson, we spoke about trends, we've spoken about support and resistance. Here, we're going to be talking about trend lines. Trend lines are drawn at angles above or below swing price levels. We've talked about swings, what swings look like in real life scenario, and it shouldn't be difficult for you to find swings on charts whenever you see it anywhere across all platforms. These trend lines are lines that follow trends. So for example, let me give you a live scenario on our chart on TradingView. When it comes to drawing trend lines, it really depends on how you want to draw it. It depends on the time frame you are using. It depends on the swing level you want to pick it from. So for example, I'm going to pick it from here. I'm going to draw the trend line, something like this. So this trend line is basically serving as support, and also it is showing us the uptrend that is currently occurring in the market right now. So with this trend line, I picked it from this swing low. Remember, trend line is also serving as support, so we're expecting that anytime price touches that trend line, it is going to bounce. So we expect price not to break this trend line because it is serving as support in an uptrend. So we're going to be looking for anytime price touches the trend line around this area or move really close to it, then we are going to be buying because it is support level. So for an uptrend, trend lines are always drawn below the price level. So you can see this our trend line is drawn below the price level. You can see when price touched it here, it bounced. It touched it here again, it bounced. Here it nearly touched it and it also bounced. This trend line is still very much active and is still serving as support. It will stop serving as support whenever price breaks below it. Remember what we said, a support can become resistance. So whenever price breaks below this space, let's say price is here right now, it can't be serving as support anymore because price has broken below it. Remember what we talked about. So whenever price breaks below this trend line, it's not going to serve as support anymore. Now it will be serving as resistance. So when price touches it, it will resist it. But right now, from the chart, it's currently serving as support. So if it comes down to this area, we can expect to go long on this chart. So if we are buying, we'll expect it to go up from here. Do you understand? So that is how trend lines are drawn. Note this, the trend lines are drawn below the price level for an uptrend. Another example for an uptrend is this. Let's say I have another trend line I want to draw here. I picked it from the swing low, then this is what another trend line looks like. It was serving as support when price was above it. So you can see from here, it touched it, then it spiked, price spiked. Touched it here, price spiked up. Touched it here, price spiked up. Remember, you want to always buy a particular asset as support level. You can see here, price touched it again, and then it went up. The only time it broke it was here. And as soon as it broke it, what happened? It started serving as resistance. From here, started serving as resistance because price just broke below that trend line. This trend line is no more valid as support as soon as price broke it. Now it's serving as resistance. So let's extend the trend line and pull it forward and let's see. Now, when price broke below it here, it started serving as resistance. When price went down, it touched it. What happened? Then price dropped again. The next time price touched it was here. And what happened? It came down again. Are you getting it? From this trend line, we could have picked about 7 trades from this trend line. This could have been a trade. 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 If you took another trade here, this support, let's say you bought here, it could have been a losing trade. At this point, we'll be out of the market because we will have our stop loss set. Don't worry, we'll talk about stop loss later in the course. From here, it stopped being a support, and then from here, it started being a resistance. So from here, we can sell. We can short sell, and if we short sell, it means what? If price goes down, we make money. It's called margin trading. We're also going to be talking about that later in the course. The only time this won't be a resistance is if price breaks above it. So this is how trend lines are drawn. Do you understand? Another example is in a downtrend, trend lines are drawn above the price. So for a downtrend, we are going to pick it from a swing high, which is here. This is a swing high here. This is what it will look like. So this is another trend line, but this is a trend line for a downtrend. Remember, when we were drawing for an uptrend, the trend line was below the price, but now it is above the price. So anytime price touches it, it goes down, right? So we can use it to determine the trend, and we can use it to determine support and resistance. So here it was serving as resistance. Here it served as resistance. The time price broke through it, it started serving as support. Right now, when price touched it, it started pushing price up. Note, you can also draw two trend lines on a chart. For example, I can mirror it, clone it, and use it as a support for the lower trend. Do you understand? So I can clone it. It's called a channel. It's called a channel. So when you draw a channel, you are using two trend lines to find both support and resistance. So for these two trend lines now, we already know that this is resistance, resistance. All this area are serving as resistance, resistance. This area serving as support, 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 support. Do you understand? And at support level, you want to buy. So let's say you are buying here, you are selling here. You are buying here, you are selling here. Do you understand? That's the second trade. You buy here again, you are selling here again. That's the third trade. You buy here again, you wait. Even though you touched it here, it still doesn't matter. Maybe you will add more to your position, and then you are selling here. Do you understand this? That's 4 consecutive winning trades. Here, price broke above it. Then you stop selling at this point because price just broke above it, and then this current resistance is now serving as support. So anytime price touches it, it bounces. Here too, when price touched it, it bounced. So we talked about breakout trap. If you check it out, it didn't really break into it. It was only a breakout, and breakout trap is what institutional traders use to lure random traders into wrong positions to make money from them. It is a deceit in the market. So price touched it again, you're serving as support, and it bounced. That's what they look like in the market. So trend lines are lines that follow trends. We have seen that in the real life scenario. You need at least 2 swing highs or 2 swing lows to draw a valid trend line. So here now, we drill this trend line. This is the first swing high. This is the second swing high. This is all you need to draw a trend line. Even though if all these things have not happened yet, all this price action, they've not happened yet. So this is what you are going to be using to predict what will happen in the nearest future. Do you understand? When drawing trend lines in a downtrend, you draw it above the price level. And for an uptrend, you draw it below the price level. I already spoke about that in the live scenario. When you are drawing a trend line for a downtrend, you will draw it above because you want to know the resistance point. And for an uptrend, you draw it below because you want to know the support. So let's use Bitcoin as another example. So this is a trend line that I can draw from here. This is a trend line. Can you see that? So let's analyze this trend line. So when we drew it, we used the first 2 swing levels. So we use this swing level, we use this swing level, and we use this swing level to form our trend line. So we drew it. Then after, we can be picking our trades because the trend line is currently serving as support in an uptrend. So let's say you bought here. This is another trade you bought here. You bought here. Around here, you could have bought, but you didn't even touch it. You bought here again. And then the only time you are going to lose money on any of this trade, it is here because price did not bounce after touching it here. Price came below it. And once price goes below a support level, what will happen? The support level will start to act as a resistance. When price broke below it, it started serving as resistance. So price touched it, started pushing the price down. When price touched it again here, it pushed the price down. Price came back to touch it here again, it pushed the price down. Here again, price touched it, pushed the price down. So currently, this trend line is serving as resistance. It's no more serving as support. Do you understand? Anytime price breaks above this trend line, then it will start serving as a support again. So for a downtrend, how do we know this is a downtrend? From our previous lesson from trends, we know that this is a swing high, right? Then this is a swing low. Can you see? The next swing high is lower than the previous swing high. That already shows that this is a downtrend because we are already having what? Lower swing highs. The next swing low is here, which is lower than this swing low. This indicates that this is already a downtrend. The next swing high is here. Do you understand? This swing high is lower than this swing high. This already shows that it is a downtrend. Do you understand? So now let's draw a trend line. Trend line for a downtrend is always above the price level. So let's draw it out. So this is the trend. We are picking two swing highs. So these are two swing highs we are picking. We are picking this and we are picking this. Do you understand? So let's draw it out. From here, so this is what we have. We know that for this trend line is going to be serving as resistance. So anytime price touches this place, we know that price will most likely come down. So if price goes to this area, we know that it's coming down. Do you understand? So when price breaks this trend line, it will start serving as support. So right now, you have a new uptrend that is forming because the downtrend line that you already drew is already invalidated. You can't use it anymore because price broke above it. Now you will need to draw a new trend line that will serve as a trend line for an uptrend. So how do we do that? We know that this is a swing, and then let's imagine price already broke through and then is retesting it. This would be another swing low, but we know that this swing low is higher than this swing low. So we are going to be drawing our trend line like this. So this would be a trend line for an uptrend. We use from this swing low to this swing low, and then we just draw it. We know that whenever price touches this trend line, it will just keep going up and it will keep forming a path for an uptrend for us. Do you understand this? So if price breaks below this trend line again, then we can consider that a new downtrend forming. This will be the end of this video. I hope you understand everything we talked about trend line. Take a break and we'll see you in the next lesson.